Hi everybody, this is Gary Dean and this is the Sentiment Timing Free Weekly Recap for Tuesday, August 18th, 2015. I'm going to give you a quick note. I'm not sure if I'm going to be doing a video report next week, and the reason is we're getting very close to some important time periods, and the technicals, once we start approaching these times and we start looking at where sentiment is and then bringing things to a technical aspect, it's going to be pretty easy to figure out exactly what is going on, and it's really not going to be fair to our regular subscribers. So I may just send out an email. I'm not sure, but if you don't get one, it's just because we're just approaching a very, very important time, and I've been going over this for the past couple weeks, so if you don't get it, that's the reason why. So let's get started. At Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that's what creates market opportunities. Now, we try to find these irrational elements in the market through Woody Dorsey's proprietary sentiment database, as well as his technical timing profiles, which project when the market could reverse. So without further ado, let's get started. Last week I had left you with that there was a chance that we could be heading up, and the reason why was this inverted head and shoulders pattern, and we actually had some bullish divergences in place, so the door was open for a move up. Mr. Market had something totally different in mind, and this is what happens when we're in a transition stage in the market. The technicals are going to give you false readings, and the thing is that we actually had a high sentiment number then, so we didn't try to go long, just because when I try to do it, I want everything to line up with low sentiment, important turn dates, and technicals lining up. On that particular day, we only had technicals lining up, so I didn't take a long position, but obviously I did miss the short position here. So with that, obviously the markets had a very, very big drop, and from there they rallied. And we only registered a 12% sentiment reading. So things are, we're seeing a lot of confusion in the markets right now. And as I had mentioned last week, we have two black holes that are coming due. And that is one of the reasons why I don't believe I'm going to be able to do a video report next week, or possibly even the week after. Like I said, I may just do some emails. But in any case, it doesn't mean that there's a crash coming right away. The last time we saw one, yes, it was a mini crash, and the S&P dropped 200 points, and Woody predicted that date almost a month before to the exact date. But what it means is that there's going to be market negativity heading into the fall, and that's what we're going to be watching. So things are going to be a little more difficult to navigate, because things aren't going to just go straight down. So again, we're going to be following sentiment numbers. We're going to be following technicals, and from there trying to find out where bounces could take place. And what that means is we're just going to kind of let you know whether, do you want to be getting aggressive on the short side or not. We don't give exact trades or anything like that, but we're going to let you know what we're thinking based off of sentiment, based off of time profiles, and based off of the technicals. So why is the two black holes important? It's basically because the last one that we saw that Woody predicted, again right here, we saw the S&P drop 200 points, and then at the exact date that Woody was projecting the low to hit, it rallied 280 points. So it was a 480 point swing, and now we have two of them. Now again, we're not sure if it's going to be something at this size, but there's two of them that are pending, and why it's going to be difficult to be doing reports. So let's just go to the technical aspects of the charts here, and this is where I was showing you last week, where I said that I thought that a bounce would make sense. Obviously it didn't. So what possibly could be, playing out right now is they're actually trying to form a different Head and Shoulders, but I'm not even going to go into that. What we really want to know is this, is where are the resistance areas? We're right here on one of them. If it breaks above it, then we're looking between the 2110 up to the 2114. Now we have bearish divergences and things are very overbought, so I would not be jumping on any kind of bull bandwagon right now. If anything, if we get a pop, I'd be probably looking to scale out of longs if you're there. Now the support areas are at the 2092 and then down to the 2090. And if it breaks through it, the bulls have this moving average they could use as well. It's a 2087. If that breaks, then they're at really the last level of support, and that's at right around that 2080 down to the 2077 level. And if it breaks, then I think there's going to be panic that's going to be setting in. Excuse me. And, we could be starting something a lot bigger than anybody is anticipating. So the wave count that I'm looking at is we made a larger A, B, and C, and all this is a larger A, and now what happened is we made an A, B. Now, the tricky part was a C of B, and now we're heading down, or is it just a little consolidation before a pop-up to make the C someplace up here? So that's really what I'm going to be following. Now, the danger part for the bulls is where there's bearish divergences already on the 60-minute charts, and we're very, very overbought. So I think buying right now is dangerous. Can it work? Absolutely. But is it something I would be doing? No. If we get a bounce, I'm just going to be building a short position, and we already know when the important dates are for the kill zone, and then possibly moving into the black hole. So I think the long side is very, very dangerous. Now that's pretty much the whole thing that we're looking at right here. Nothing has really changed, so I don't have a whole lot to go over. And if you guys really want to follow the one of the best market timers in the world and trade with confidence, knowing when to expect specific turns, and being able to view the markets through sentiment instead of regular price, but we also add price into it through my technical analysis. And with somebody who has over 30 years of experience with some of the largest institutions in the world, you can take advantage of the free offer that I'm offering right now, and that is anybody that signs up for Sentiment Timing, I'm giving them a free membership to MarketsPath. I typically do this for $79 a month, so you can do the math. It's a $960 thing I'm giving you. But in any case, what I do at MarketsPath, I do morning notes, nightly video reports, email trade alerts, and we have a trading room. So if you join, it's the special running is $99 for the first month. Just send me an email to gary.dean@marketspath.com. This is just the last trade. We haven't been in any trade since then. I do options, but you guys can trade whatever you want. I just pretty much say what trades I'm making if you feel like following. But it was a $1,200 trade in a matter of a few days, and that's really the type of stuff I look at. I want to make sure everything's lined up before I start doing it. So anyway, that's pretty much all I have for tonight. Again, if you don't see a video report next week or the week after, it's just because we're just getting too close to important turns, and something that it can make a trader's year in a matter of a couple months, like it did back at the last black hole event. So with that, have a great week, and I'll talk to you next time I do a video.